Hey, it's Connie from Prosperity Finance. I hope you're well. Finally, we come to school holidays. Well, for me, that means I don't have to pack lunch for my daughter and I can have more time back for work, right? Because you don't have to do the pick up and drop off. And for the kids, it's time off, playtime. So all good. I hope if you have kids, enjoy the school holiday. If not, enjoy the light traffic as well. Cool. So what I'm going to cover today in this video is I'm going to talk about mortgagee sale. Now, why I choose this topic? Well, recently, one of my clients was looking to buy a mortgage sale property. Well, generally, mortgage sale property, normally they were sold under the market price, right? Definitely worthwhile explore this type of a sale, but there's a lot of risk involved. I'll share that with you. In this video, I'm going to talk about what is a mortgage sale and what are the risks involved and if you can borrow to buy a mortgage sale property. So firstly, let's talk about what is a mortgagee. Right, mortgagee normally is a lending institute like a bank or finance company. They lend money to you and they also take a security over your assets like your property. Now, what is a mortgagee sale? Generally speaking, you repay your loan on time, everything is fine, there won't be a mortgage sale. However, things can change, right? Your health, your job, everything can change and interest rate can go up in the roof. Like during the GFC period, the interest rate was like 10%, but you may not be able to catch up the actual repayments. So for whatever the reason, if you can't repay the loan over a period of time, and after legal procedures, you can still not, repay the loan, then unfortunately, the last resort is to have a mortgage sale. The lender sell the property through auction to recover the debt. Okay, so that's a mortgage sale in a nutshell. Now, if you are looking to buy a property and then it says mortgage sale, what do you do? Well, mortgage sale, normally a sale and purchase agreement has additional condition in them. These conditions, you have to read really careful because there's some risk involved. So what are the common risks with mortgage sale property agreements? So firstly, the mortgage sale property, generally, they don't guarantee the vacant position. Now, if you're buying property and you want to live by yourself as a first home, there's no guarantee the property will be sold as a vacant position. So that's one. Secondly, normally the condition of the property is not guaranteed. You probably understand, with mortgage sale, the borrowers can be really, really sad. They can damage the property during the mortgage sale period, so the condition can be really poor. So there's no condition guarantee on the property. Now, thirdly, the normal special condition chattels in the property is either not included or there's no warranty. Now, chattels can be like oven, dishwasher, curtains and carpets, etc. Normally, they are included in the sales purchase agreement, but with mortgage sale property, they generally not included, or even they included, there's no warranty that they are working. So just be careful when you consider buying mortgage sale property. Also, there's another common condition is there's no warranty on the building permit, building consent, or boundary. So there's a lot of things has no guarantee. Now, the best approach is to get your solicitor involved as early as possible and get them to review each condition, especially those special conditions in the sale purchase agreement. If you are fully aware of these conditions and still looking to buy the property, then that's fine. But at least you are aware, your purchase price probably doesn't cover the value of these chattels, and you probably have to spend more money to fix these. So just be aware. So generally, bank is okay for you to buy mortgage sale property as long as you are fully aware of these risks. And secondly, the bank normally would check the title as well. Now, on the title, normally have the bank, the current lender, as first mortgagee. Sometimes there are other special wordings in the title. For example, second mortgage or caveat. Those are the security arrangements after the banks. For example, if the borrower borrows some money from someone else normally register a second mortgage or caveat, just in case the borrower doesn't repay back. So they have kind of security arrangement on the title. It's not as strong as the banks because they rank behind the bank, but at least they can't sell property without telling the lender. So make sure the vendor can repay the loan and make sure these other security arrangements is removed on settlements. Well, it's not always feasible. Sometimes they just don't have enough money to pay back. Now, as a result, the settlement can be severely delayed, and you already declare unconditional, so you can't really buy anything else. So just bear in mind, what is on the title, how likely those second mortgage or caveat can be removed on settlements. So that's normally the second condition from the bank on top of the normal conditions. So you need to get your solicitor involved, and the solicitor normally need to work with the vendor's solicitor and make sure these are definitely achievable. So in this video, I talked about what is the mortgagee, what is the mortgagee sale, and what are the potential risks that involved if you purchase a property as a result of mortgagee sale. So if you fully aware of these risks, you've done all the homework, you check with the counsel, you check with your solicitors, and you think it's still a bargain, set a reserve price, normally below the market price. If you can get it, I think it's definitely worthwhile. And you can instantly build some equity on settlement. So definitely worthwhile explore this option, but just be aware of those risks. Right, thank you for watching this time. I hope you find it useful. Please subscribe our YouTube channel because every week we have really great content to share with you. Thank you for watching. I'll see you next time. Bye for now.